All right, let's get right into it. We're looking at a company that's, believe it or not, 150 years old, but it's acting like a brand new, high growth startup. I'm talking about BSE Limited, Asia's very first stock exchange. And its recent performance is, well, it's pretty wild. So, what's this number all about? 103.5%. That is BSE's profit growth in a single quarter. I mean, seriously, that is not a typo. For a company that was founded way back in 1875, to see profits more than double like that, it just makes you stop and ask one simple question.
Right? How on earth does an ancient institution pull off that kind of crazy, explosive growth? Well, you know what? That's exactly what we're going to unpack today. We're going to dig into the brilliant strategy behind these numbers, straight from the source material.
Okay, so let's set the stage here. Section 1, 100% profit surprise. As it's celebrating its 150th anniversary, BSC isn't just, cutting a cake. It is absolutely shattering records. This last quarter was historic. We're talking revenues crossing 10 billion rupees for the very first time, and profits, well, as we just saw, rocketing up by over 100%. Just incredible.
All right, next stop, the Battle of the Bourses. See, to really get what BSE is doing, you have to understand the battlefield, the Indian stock market. It's basically a duopoly. It's a two-player game, and it's completely dominated by BSE and its much younger but much, much larger rival, the National Stock Exchange, or NSE.
And when you look at the main event, we're talking cash equity trading. It looks like a total knockout. I mean, the NSE is the undisputed Goliath here, controlling over 90% of the entire market. And BSE, well, they're the David in this story, holding on to less than 10%. So on the surface, you'd think, well, that's game over, right?
But, and this is where it gets really interesting, while it looks like one player is holding all the cards, the real story is so much more clever. What if the game isn't just about winning on that one single battlefield?
And this, right here, is where BSE's genius strategy comes into play. Instead of just throwing everything they have at a fight they know they probably can't win, they've done something incredibly smart. They have strategically carved out their own kingdoms, these super profitable niches, where they don't just compete, they absolutely dominate. So you're probably asking, where's the money actually coming from them? Well, this chart makes it all crystal clear. Take a look at their revenue mix. Cash equities, where all that fierce competition is, that's only 15% of their pie. The real engine here is derivatives, a massive 57%. And then you have those powerful little kingdoms we talked about, the SME platform and mutual funds. That's where the magic is.
So just how dominant are we talking in these niches? Let's start with the small and medium enterprises platform. Get this, BSE has a staggering 95% market share. 95. It is, without a doubt, the place for small companies to go public in India, period.
And guess what? It's the exact same story with mutual funds. Their transaction platform, which is called BSE Star MF, controls an incredible 89% of that market. Think about it. Millions of investors are using their system, probably without even realizing it.
So the key takeaway here, the big idea, is this. BSE isn't trying to beat Goliath with the same old weapons. No way. It's way smarter than that. It's changing the entire battlefield to a place where its own weapons are the strongest.
But look, a clever strategy is one thing. It's totally useless if you don't have the power to actually execute it. And BSE's whole approach is backed by two massive pillars, a rock-solid financial foundation and truly world-class technology. And you really don't need to be a Wall Street analyst to see how incredible these numbers are. Just look at this. Their debt-to-equity ratio? It's zero. Zilch. This company owes nothing to anyone. And maybe even more impressive is the net profit margin, a full 50%. That is just wild. Let me put that in really simple terms. BSE is completely debt-free. And for every single dollar of revenue that comes in the door, they get to keep 50 cents as pure profit. That is a sign of incredible efficiency. And all that financial power, it gives them the freedom to innovate and invest in tech without ever having to ask a lender for permission. Okay, and what about the tech side? Well, how about this for a fun fact? BSE operates the fastest stock exchange on the entire planet. The response time is just 6 microseconds.
And look, this isn't just a cool thing to put on a brochure. It's a massive competitive advantage, especially when you're trying to attract those high-frequency and big institutional traders. So, let's recap. We've got a dominant player and its own niches, a fortress of a balance sheet, and amazing tech. It sounds perfect, right? But this brings us to the big, flashing red light question for any investor. With all this good news baked in, is the stock just too expensive now? And the valuation numbers, they tell a pretty clear story. BSE's price-to-earnings ratio, which is basically how much you're paying for $1 of their profits, is over 45. Now, compare that to the industry average, which is closer to 28. So yeah, there's no doubt about it. You are paying a serious premium for this quality, and that's really the central dilemma here. So the big question is, what's a fair price? Well, one way analysts try to figure this out is by projecting future cash flows, and that gives us a range of possibilities. In a pessimistic bear scenario, maybe the value is around 3,500 rupees. The most likely base case probably puts it closer to 4,800. But if everything goes exceptionally well, that's the bull case. It could climb all the way up to 6,200.
Okay, so let's pull this all together and land the plane. To really summarize the entire picture, we can look at a final scorecard that's based on the source analysis. And here it is, an overall score of 7.6 out of 10. That's really strong. But let's look at the breakdown, because that's where the story is. Financial health gets a fantastic 8.5. Growth prospects are solid at 7.8. But notice that one area that's a bit lower, valuation, sitting at a 6.0. This confirms exactly what we've been talking about. The company is great, but the price is high. So if we boil this entire thing down to its essence, here's the takeaway. The bull case, the optimistic view, is that you're investing in a debt-free, tech-leading company that is basically a monopoly in some really high-growth niches. The bear case? Well, it's that you're paying a very, very high price for a stock that still has to face a massive competitor in its biggest potential market.
And all of that leaves us with one final question to chew on. Is BSE a 150-year-old giant that's brilliantly learning new tricks to fuel another century of growth? Or is it a fantastic niche player that might just be reaching the peak of its power and its price? That, right there, is the billion-dollar question.